Hello and welcome to this very special episode of 51% Attack. Look at that. I was going to just put up the big screen with the logo, but then I accidentally copied it into TradingView and I thought it was really funny. So now I'm just going to leave this up forever and ever and ever. Not really. But yeah. I'm in a bad mood, but I've been promising this video for a long time, so I'm also a little bit nervous about it, so I kind of just want to get it over with. Rip this band-aid off. And so today we're going to talk about how me personally, and only me personally, like to do my entries into the market via buys, longs, sells, and even though I don't short, you can certainly use it to short. And that is using the wave trend oscillator, which is from the creator, I think Lazy Bear is what LB stands for. Anyway, there's 100,000 oscillators out there, and anyone can pick any one of them or any number of them, multiple to use in tandem to figure out their own trading strategy. But I think one of the most important things for any person, trading in this market is consistency. And I mean, I know it sounds a little like a cop out, but what works for you and what keeps you the least stressed out is probably going to be the best thing for you. For me, I've been using the wave trend now for I started looking at it like around because I was confused by the JPOW liquidity craziness of 2021, which was right around here, is when I started looking into it. I was not using it to make entries or exits from the market. That's when I started examining it. And so throughout the bear market and through this early, what I believe is the first phase of the bull market, I have been, using the wave trend to make entries and exits. And right now I'm on the ETH chart. I stopped using the ETH chart more or less after the 2022 plunge because once we were confirmed into a bear market, Bitcoin still, I think for one more cycle, controls everything. And so today we're going to be using the Bitcoin chart to explain the wave trend. Before I get into this, I already said this is my own personal use of it. I have to put out the usual disclaimer, like any good YouTuber. Oh, whoopsies. Sorry. Hang on a second. What I meant to do was this one. Yeah. This is not financial advice. This is just what I like to do. It is not only is it not a science, not is it only not a science, it's hardly even an art, as you're going to see. There's going to be so many people going, this is the dumbest fucking thing I've ever seen. This guy is just like kind of following sort of smooth curved lines and making trades based on it. Like I don't care. I don't care anymore. This is how I do it. People have been asking, so this is not financial advice. This is just how I look at the charts. So let's get into it. So here's the Bitcoin chart. Let's get rid of the RSI. Although we should talk about that later. But no, we're not doing TA until I get this out. So let's close the RSI for now. We'll come back to that. Yeah, well, actually, no, we might end up using it, but we're not going to talk about the weekly RSI for now. Also, this Bitcoin chart is really messy. Let's just go to one I don't use as much. That still has a bunch of lines. Okay, they all have lines. I'm all over the place. But I'm procrastinating. So here we go. Right now, we're going to be mostly focusing on this wave trend oscillator down here. And it's comprised of a few regions that are similar to a lot of oscillators. We'll just quickly go over them. These two green lines, there's a low level and a high level of oversold status. That's these green lines here. We'll talk about how you might want to. Gosh, I have to be very careful about pronouns in a different way today. I'll talk about how I sometimes use these lines. There's also the midpoint, which has, I believe it's a MACD or volume profile. I think it's close to a MACD. And the midpoint also just represents a midpoint. It's not very complicated. What happens at midpoints? Trends switch. We'll talk more about that later. And then finally is the top two lines, dotted and red. The final zone is this dotted red and the solid red, which represents overbought, just like on most other oscillators. And I'll talk about how I approach things as we approach that zone. If you want to keep track for later, the dotted lines of each section begin at the numerical value 53. I don't know why Lazy Bear chose that, but that's what it is. So the dotted lines are at negative 53 and positive 53, and then the solid lines are at negative 60 and positive 60. So that's what we'll be using. And then the oscillator itself, the oscillating lines themselves, there's a fast moving average in the solid green and a slightly slower moving average in a dotted line red. Can sometimes be confusing, so you can make your own. If you decide to check out the wave trend, you can make your own colors, but I just left it on the default, and I don't know, it's been working fine for a year and a half now. So without further ado, what does all this mean? Let's just take it from, so we're on the Bitcoin chart. Let's just go back to the start of 2023, and I think I'll be able to walk through sort of how I envision my own entries and exits from certain trades. Basically, everything I say is going to sound so dumb. So when we're coming off of a major oversold zone, and again, we're on the weekly chart. So these are larger plays. Usually for me, it'll be a lower risk, either lower risk leverage or a much smaller buy or out of a lower risk stack. I feel more comfortable doing that using the wave trend on the weekly chart. And so, as you can see, going into 2023, if it wasn't already obvious from the FTX dump, Bitcoin was trading extremely low on the wave trend. It was very near. It was either in or just hovering above the oversold zone for quite a while, actually. But it was back there at the end of 2022 into 2023, and so the way I treat the oversold zone on the wave trend is not only is it just the basic oversold zone like you see on a standard RSI. The messaging that I've sort of been going with is that this will give you that if you're close to this line, if you're close to the oversold zone here, the probability, because that's what all my trading is about, probability, it's what 51% attack is named after. Being right just 51% of the time will result in profits. The probability when you're near this green line is that that worst case scenario, you're going to get a chance to sell higher, meaning it's a good buy. It's a good buy for me. So I was looking at this zone, and for me, I look for just a simple cross up. You can see. So we're going to keep an eye on these numbers over here. These are the faster moving average and the slower moving average, and we're just going to look for the cross up. I'm not going to be able to keep highlighted over here, so use your own eyes. But you can see in early December, actually, did this go back and forth? Did I pick a bad area? No, this is a good area. Okay, so actually, let's go to the end of November. The faster moving average was at negative 52, negative 53, pretty much inside the oversold zone. And the slower moving average was at 49, so no cross. Then they were at 51.88. Oh, and remember, this is in the negative, so the higher number is lower. That's why this works. So the following week, first week of December, you had the faster moving average at right around 51.88, and the slower moving was at 51.44. No positive cross. What happened the next week? Finally, you get a positive cross. The faster moving average went up to 50.15. Slower moving average was still at 51.8. This is my first opportunity to decide if I want to certainly buy back in. I don't remember my trade from this week. I probably should have looked that up for evidence. But anyway, just to give you my mindset, it would have been somewhere in these three sections, depending on my mood those days. You've got this positive cross up. It's very, very possible that I wait for a confirmation week. And so we got one positive cross up, and it would have closed at 16.7K. The following week, you got a confirmation of the cross up. And when I say confirmation, I mean that one, it's, a confirmation candle, but also a chart such as the weekly, it smooths because of it's a longer time scale. Things get smoothed out, and it's harder for it to just reverse on you out of nowhere. That's not me saying that it can't. This is crypto after all. But generally speaking, in a world of probabilities and statistics, it's less likely to just pull an oopsie doopsie reversal on you on a weekly chart. It can happen. You can lose 49% of the time. But anyway, that's my philosophy. So on this confirmation candle, again, this is the second week of positive cross up. I would have either bought or straight up gone long here. Now, why was I able to go, in theory, why was I able to go long here? One, because of the cross up, and two, because the cross up is happening right up off, this oversold area. At the very worst case scenario, I was thinking I'm going to get a chance to sell this higher. Even if the long doesn't play out very much, I'll have a chance to exit. And yeah, the next week was down. Those are the scary weeks when you've made a decision on your trade and the very next move it makes is down. It's one of the things it's one of the most important things to overcome. I've been telling myself over the past probably 2 or 3 years that if I were to ever train somebody in trading, one of the most important things that a trader that can happen to a trader is to lose money. Because on a good decision, that money will come back and more. If you've been following, a system that works for you. So on this week, I would have, lost money, but we got a second confirmation candle. If you look again, the faster moving average is still above the low. So, you hang on and you wait to see what's going on. Whether I've only bought in or whether I've gone long, it's worth waiting to see. Following week up, averages can keep going up. And then, of course, you catch a move like that. So it'll as with every trade, it plays into your risk preference and what you're willing to accept, what kind of stack you're playing with. Obviously weeks like this red one immediately after you've entered a trade are going to be frightening, but that's the risk that nobody can tell you how to avoid. You can actually we'll talk about daily charts later. Let me keep going with this my little system here. So what's the next move after you've either bought in or gone long? If I'm talking to myself, what's my next move? Basically, I'm watching for the slope to sort of just flatten out, which again, this comes back to this isn't scientific or even very artistic. It's literally just how are you feeling about things and kind of using an oscillator because again, a lot of this is just to keep my stress levels down when I am in a position or planning to enter a position. It prevents the second guessing and that sort of anger that can come can come from ourselves. So I'm looking for this curve to flatten out. And as we follow along with that faster moving average, we're at negative 34. Next week is at negative 18, obviously because Bitcoin was surging then. So that's, a jump of 16 points. The next week, another jump of 13 points. Woo, everything's looking good. And then suddenly you get a red week. And, I'm sure I'm looking at a few different things here. One, has the velocity of the curve slowed significantly? We've gone from negative 5.75 up to positive 2.95, which is a milestone that it crossed over the midpoint. That doesn't worry me at all. That's still a substantial, 7-point move? 7-point move. And a move above the midpoint without stalling is pretty huge. So I hold. Following week, another red. Starting to sweat, for sure. And I'm looking at a number of different things. I'm looking again at the curve. We've gone from 2.95 to 7.42. In the grand scheme of things, that's still a 4.5 point move up. I'm holding. And not only that, but the slow moving average is still rocketing upwards. It's gone from 26 to 13 to 3. So that's a move of, those are 10-point moves. Even as these red candles are forming, I'm not getting too worried. And in addition to those being still larger moves on the slower moving average, it too will, you can see its trajectory. It's going to cross the midpoint. It's pretty bullish. And especially bullish when once both averages have crossed. So, it's one of those things where, you have to look at different factors. And, for me, I'm looking at, again, not just the slope, but how are the averages interacting with the, one of the three key landmarks on the chart, which is, the oversold zone, the overbought zone, and the midpoint. Here, everything was looking pretty good. And so even though, I'm sweating, maybe I'm taking a look at other parts of the chart. For example, on these 2 red weeks, look at that volume. I mean, just plunging volume on those red weeks. That's bullish. That's a bullish divergence. In that you've got, red and down is, bullish. In addition to that, you've got the RSI, which, if I were looking at this week where, again, I was just saying my hands might have been sweating. If you look at the RSI, it's, closed the week at 51.95, almost 52. By definition, that is a hold above the 50 point on the RSI. So I know I've left the wave trend chart for a second, but I'm trying to explain that if, on these sweatier weeks, if I can call them that, I'm looking around to see how I feel about other oscillators. Usually when it's getting to be decision-making time. So here I'm holding, and look at that. I caught another move here. This is, an 11% week, classic Bitcoin, just, the old scare. But now it's time to take a look at where, things can get a little dicey. So we had 3 red weeks in a row. Let's see what happens to the curve on these weeks, because I'm looking for that flattening out. We go from 13 to 18, so up 5, still good. And then suddenly, the second week, clearly enough volume came through where the chart has gone from only 18 to 19, so a little bit over just a 1-point move. This is where I personally exit along. That's enough for me. We're a bit in no man's land on the wave trend, which means, anything can still go. The curve has certainly flattened out. The RSI isn't doing anything special again. If anything, it's, it's just kind of there. It's not a bull div or anything. I cancel my long here because, again, the curve has flattened significantly. It's now only gone up 1. Whatever happens next, I'm pleased because, it takes a second to restart the oscillator. And lo and behold, even though I'm still holding, I still own all the Ethereum. I'm just not long. Oh, by the way, and so even though I use the Bitcoin chart, I only buy Ethereum now. So I'm still I haven't sold anything. I just canceled I just exited my long. And so now we get this week, and look what just monitoring the curve has done. It just protected me from a massive long squeeze. I was thinking of the word for a second. So it protects me from a massive long squeeze. And where's it close the week? In terms of, my just held Ether portfolio, I'm down. Well, sorry. I'm on the Bitcoin chart. So Bitcoin went down 1%, and Ethereum, I'm sure, did something scary too. It actually ended up. Okay, so la-di-da. Ethereum ended up plus 1.76%, which, is in crypto is effectively flat. But after a week like that, feels like a massive victory, even more so considering I canceled my long at the close of this candle. Again, because the curve flattened out significantly. I mean, frankly, anything below a 2-point move is flat to me, and I will cancel along and certainly start taking a look around the charts. So what happens next, you're asking? Because there's a big old green candle next. Ta-da! Except for one problem. Because of the close of this week, even though I avoided losing money, which is like the number one thing to do as a trader, I certainly haven't re-entered a long. And I missed this move as part of a long because I followed my trading strategy. How do I feel about that? Pretty damn good, actually. So Bitcoin went up 26%. Ether went up only 12%, because that's how bear markets work, or at least the ends of bear markets. And so, I only made 12% instead of whatever my long multiplier would have been. This is one of those things where the whole point of this channel, 51% attack, the whole point of the wave trend and smoothing things out and keeping your stress levels down, it's about feeling good about that move. And you have to. If you don't, then you need some other strategy than the one you're listening to now. you still make money. Like you're still holding crypto. It's not a problem. You just missed your long, and that's okay. And so we keep monitoring the chart. I'm looking again for, do I want to go long again? Again, I've probably missed my opportunity here. We're coming out of no man's land. We're not really, we're not bouncing off the midpoint. I'm not going long here again. And so, I'm watching as, Bitcoin keeps going up. My Ethereum stack also keeps going up. And, we get to, this week, big green candle, another 14% week. Has the chart flattened out at all? Now, on Bitcoin, we've got, let's go from this big candle. I'm looking at the fast moving average, over here. So we're going from 26 to 34. It's a big 8-point move. Great. 34 to 39, about 5 points. Still fine. What did I say? 39 to 42.73. So a little bit over a 3-point move. It's starting to tighten. I'm keeping an eye out. Over here, it goes from 42 back up to 46, almost 47. So a 4-point move. Feeling pretty good. Then we get this down week. And so let's take a look at what this represents. So on this down week, you're going from 46. So on the faster moving average, you're going from 46.9 to just 47. So I'm not long here. If I were long, I would certainly, again, close it here. This is a warning sign. And, by the time this thing closes, and I'm wondering if it's time to, make a sell, so I'm looking for the cross back down for a major sell. And I want to put an asterisk on that to come back to in 30 seconds because there's one other major thing. But I'm looking for also a negative cross down to really exit my position. And we don't have that yet. We have the faster moving average at 47 and the slower at 44. I'm looking for that confirmation, that cross down, anything that would tell me this is a warning. You will get a chance to make a major, re-entry at a major price point or at a price point, lower down in a major way. So the following week, obviously, there's no sell confirmation. It's a green candle, which is lovely. But the faster moving average only goes up 0.3. So definitely feeling good about, monitoring the charts, certainly not going long. Even the slower moving average is beginning to flatten out. It's gone from 44 to 46. And then the following week, you get another red candle, a smaller one. But again, it's time to take things into account. The, faster moving average has stopped going up. In fact, it's gone down, by half a point. So again, feeling really good about not going long and still looking for a sell. And then actually the slower moving average has surpassed it. It's gone up to 47. So here I have two options. I can sell, I can hold and wait for a confirmation. I can sell, or I guess the third option is short, except let me just tell you right now, I do not short crypto. I've never shorted crypto. Maybe for a lark on some kind of like GMX back in the day, but I don't short crypto. So that's enough of that. If you want to, that's totally fine. But like via con Dios, this is how I wave trend. So I would consider, shorting here, but more than likely I'm holding and waiting to see what the next candle is. Next candle is, of course, red, which is a confirmation. You start to see some acceleration downwards on the faster moving average, going from 46.8 down to 42.7. That's a 5-point drop. The slower moving average has also gone down. So have I sold here? On probably my faster moving stack, my trade stack, I would be considering it if I haven't done it already. On my longer moving, on my longer hold, my full, bull market portfolio, the answer is no. And this is the asterisk I'm coming back to, which is when we zoom out on the wave trend. Let's see how far back what is this, the Bitstamp chart? What am I on? Oh, am I back on the index? No, sorry. The Bitstamp. it doesn't really matter. This one's just a little cleaner. It has fewer of my messy ass lines. So what I've come to find is that with the wave trend on the weekly, which is very helpful to trade and define a bull market, I have not found a reason to sell my portfolio until the wave trend has gone into the overbought zone on the weekly. So even during these scary moments, so let's go back to like, here's the 2012 bull market, here it has, and I don't know what the wave trend would have looked like back then, or how I would have used it. I'm just talking about, I'm using hindsight. Admittedly, I'm using hindsight here. So here, when volatility in Bitcoin was, of course, insane in its early days, it had to cross up into overbought. It came back down. This would have been a fine point to sell for me if I were using my modern sensibilities on an older part of the chart. You had the weekly cross down, and I would have lost out on that a bit, actually, because the price didn't really go down very much on Bitcoin. It went from a massive 12 down to 10. But that's okay. I probably would have bought in again as it curled back up and went from a massive 12 all the way up to, $16. Wow, what a time. But anyway, I'm getting into the weeds. So over here, it went into the overbought zone, so that once the major cross down happened, I would have felt pretty good about, a sell over here. And as it crossed back down out of the overbought zone, finally crashed through the midpoint, that was the end of that for that first bull market. Over here, 2016, 2017, you can see that I wasn't using the trend back then, but I would not have sold on this cross down because actually neither the faster moving average nor the slower moving average made it up to 60. They did cross into the zone, but they didn't get above it, which is the metric that I'm planning on using. And, finally it went over here. It finally did cross up in June of 2016 and had a cross down. I would have sold there. Not too bad. I would have re-entered. I would have waited for some serious confirmation. If I knew my emotions back then, I probably would have waited until, I don't know, probably right around when I actually bought in on Ethereum, probably in the fall of 2016. And then, would have, rode this, a little bit higher with some moves as the weekly crossed down a bit or slowed down. In any case, same goes here with 2019. It did, both averages broke above the 60 point, and so it would have been fine for me to sell on this cross down, and that would have been really good. I would have caught, if even without COVID, I would have caught the 2019 bottom. And once again, you can see over here, which is awfully similar to where we were pretty much in July, August of this year. We saw a weekly cross down, but this cycle had not seen, after setting a low, this cycle hadn't seen us go above the, the overbought zone at 60. And so it wasn't quite time to sell here, at least not from the portfolio, maybe from the trading stack. Bull market happens, both averages cross above. Now any cross downs here are subject to my system of, starting to sell out of the portfolio on a weekly cross down. As we all know, statistically speaking, and as far as the charts are concerned, the top of the market was April 2021 for Bitcoin, May 2021 for Ethereum. Everything after that was an insane greed and liquidity driven double top. Yes, the price went higher. No, this was not the actual cyclical top of the market. It was a fluke, caused by just the insane dying gasps of a capitalist greed deluge. So over here, these cross downs were certainly subject to the system of, both averages had gone above the overbought zone. Any cross downs, probably would have been fine sell points. And they were. So you can see on our dead cat bounce turned into double top. I don't really want to analyze this one too much because it's so unusual. Obviously it didn't get above the overbought zone, but that's fine because it wasn't a market top. We weren't heading into a market top. This is more akin to a dead cat bounce, where it should have looked more like this below the midpoint, or 2019. Well, 2019 actually did go into the zone, so that's a bad example. But because this was the dead cat bounce of the 2021 market, it should have been down here. But it wasn't. So that's that. Anyway, so how am I going to approach it now? Well, we've had 2 cross downs already on the weekly in just 2023. A cross down in May and a cross down in August. But Bitcoin hasn't yet, become overbought on a large time scale on the wave trend. So portfolio wise, I'm not making any moves out of my portfolio. In terms of my trading stack, I'm definitely making moves on these cross downs. Just managing risk. And I'll tell you right now, I'm going to be completely honest, obviously, if it wasn't completely obvious, I totally missed the June move. I mean, I didn't catch any of that. In terms of a long, sorry. Obviously, I still had my portfolio crypto, but my trading stack was seriously depleted. I had not seen any signs of buying back in. The wave trend wasn't at the. Let me zoom in. The wave trend was not at the midpoint, and I zoomed in too much. Where am I? What was I just talking about? Oh, the June move. So you can see here the wave trend was not quite back at the midpoint. The faster moving average was still accelerating, and I missed this move. I was not long on this move, and that's that. So I've been riding it out, pretty much ever since on just the portfolio crypto. What was nice though was when we got this recent cross up that I hadn't. I think I'd mentioned the wave trend, that I used the wave trend, but obviously, in Discord and stuff like that, I was just pretty much screaming that, all the indicators were flashing really, really good for crypto towards the end of September. And I made that actionable with a cross ups, with buying in on the cross up. So here, let me see what this was. Yes. Okay. So what I had multiple positions, but let's just simplify it. I had 2 major ways that I played this. I have low risk longs and high risk longs. We'll just call them 2x and 5x for simplicity's sake. Over here on the week of October the 2nd, we had a positive cross up on Bitcoin's weekly wave trend. You can see that the faster moving average -5, slower moving is at -9. That was a positive cross up that I was very willing to take part in, and so I activated a 2x long, which is to say that I was feeling pretty good, but I wasn't overly confident, which worked in my favor because the following week was a red candle that briefly looked like it was going to form an evening star. That's just my TA patterns coming into play, and I was pretty damn nervous, but the week closed again with a confirmation. The faster moving average didn't really move. It was kind of flat, but the slower moving average continued to move, actually started to move back up. And so I activated my riskier long and caught this move, which is really great, and caught this move, which in Ethereum translated to a little bit less. It's only gone up 14% compared to Bitcoin's 23%. But that's how I trade, and that's how I caught that. There were other things in play, such as, again, also on this week that I was just talking about. Oh, I went back to the index chart. Well, it doesn't matter. So also on this week where it was initially looking like an evening star, but the slower moving average was still looking pretty good for the wave trend. Look at the RSI, closed right on top of it at 50.26, which showed great strength to me, and so I went for it. There was also declining volume to go with, and so that's how that move was caught. And it's not going to work every time. This was one of those times that worked out, but that's how I used the wave trend most recently, and that's how I've been using it throughout the year. That pretty much covers the trading aspects of it. Again, it's going to be more about, if anyone else were to look into using wave trend, it really is about, consistency and remaining stress-free. I don't stress out about even really daily moves. The chart, the wave trend oscillator works on the daily, as long as you realize that, as with anything, trading the daily is going to be more volatile and thus a little more risky. you'll miss some moves. You'll miss more moves. You'll hit more moves, and the moves that do happen will often take more. They're going to add more or subtract more from your capital. That's how that's how it works as you dive more and more into the charts and get more into the minute and the nitty gritty time frames. But it can really pay off if you're really diligent about it and consistent with your trading. Like I am, or I have been. I'm constantly looking to smooth things out. I take dollar cost average to heart, and that goes through with my trades as well. And it's honestly, I know I keep saying this, but it's true. My stress levels in terms of crypto have gone down like exponentially during this bear, which has been really nice because I'm still making money and not worrying about too much. The wave trend also comes in handy for a lot of the let me go to a cleaner chart again. It also helps me when I kind of talk about where we are in cycles. I've actually been using wave trend even to analyze that, where there are certain patterns that are emerge where for all the analysts running around with their heads on fire, because they have to put out content because that's their job, whereas I do this for funsies, I guess, on a better day at least. We were discussing, I think like a week ago, about how YouTubers unfortunately are forced to put out these like crazy exclamatory videos about like everything's on fire, or we're about to hit 100K, here's why this newest indicator is telling you this move, and they'll just keep reversing their position over and over again because they need content, and that's fine as long as you understand that. I mean, there's good info to be had. I watch a lot of them, but you do have to understand that there's a reason why they make videos the way they do. I avoid all that, and I just kind of stick to not even my beliefs, but just like the patterns I see. I'm not very good at many things in life, but I'm pretty good at pattern recognition. And like one of the things that I've just been seeing for a long time is like, look what happened in 2023 on the monthly Bitcoin wave trend chart. Just like we've been talking about this whole time with trades, look what was happening on the monthly. Look at the curve smoothing out here at the double bottom. Look at the fast moving average. It's going down going down by -5, -4, -3.5, and then only 0.3. This would have been like a place where if I had like some kind of cyclical short, this is certainly where I would close it. Or I guess if you consider like being out of the market completely, having sold crypto, which I don't do, but I would have bought back in here because again, the faster moving average has effectively flattened out. It's signaling something. And if you think that moves don't happen on the weekly very often, then the monthly is even more exemplifying that theory, because it takes an act of God to move oscillators on the monthly. Trends are very easy to pick up on here, at least easier than they're going to be anywhere else. If I were some kind of like, again, quarterly or cyclical, incredible long-term trader that for some reason didn't have my hands on crypto at the moment, I would buy in here based on the monthly chart. And you can just see how it's been accelerating. And there's like people, get fearful on the daily, just like, oh, when are we going to, oh no, we dropped $100, $200. We're down like 10% for the week. Wow, what a scary week. The monthly's fine. Guys, it's like the bear market was ending. I could even make the argument it ended this very month, or one of these weeks. I called the end of the bear market a couple months ago, I think, when we talked about what I consider the first phase of the bull. And this is a lot of the reasoning behind it. It's like everything's kind of fine for now. Yeah, there's gonna be moves, there's gonna be volatility. It'll drop again, I'm sure. I'll lose money. It's okay. But overall, like the bull is getting started. Look at this thing, interacting with the midpoint. You've now got both the fast and slow moving averages are above the monthly midpoint. How many times in history has that happened? This chart's actually not long enough. Let's go back to the index for a second. Sorry about the mess, but we need more data. How many times in history has this happened? Let's see. We're on the monthly. Happened in 2019, just before the flattening, when it flattened out for months. I don't think the crypto market has time for a flattening, because we're going to be racing the Fed rate hikes. So I don't know if we're going to see that again. But even so, look, the monthly was crossed above the midpoint, and that was it. You were never going to see Bitcoin. Never saw those prices again. You know, with the exception of COVID. I've already talked about this endlessly. Yes, COVID was something that it was a chart breaker. It's one of those moments you lose on. Even then, though, I mean, the month still closed at pretty much the same low. So in the grand scheme of things, Bitcoin never really saw this price again and went straight up. Prior to that, when did it happen? Looks like right around here, like roughly January, February 2016, which was a great time in crypto, if anybody remembers, especially for Ethereum. So, you know, that was it. It was fine. There were oscillations. There were weeks where it goes up and it goes down and all that kind of stuff. But overall, that was an amazing time to join crypto. And then look, just a year later, actually quite a bit long. Sorry, a year and a half later is when it peaked. Are we a year and a half away from the peak now? I don't think so. I don't know. That's one way to read it, though. And then, again, the oscillator can't go back far enough because Bitcoin didn't exist long enough on the monthly. But you can see, like, here's the oscillator. I guess there's not much to really discuss there, but obviously it was well above the midpoint heading into its bull market. If you trace these lines back down to the 2011 bottom, I'm sure they either would have been above the midline or maybe even still above the overbought point. I don't know. But the wave trend, in addition to being a way that I can, you know, make entries, exits, and trades, it's so good for stress. I can't say that enough. It's all fine. Look, if something truly terrible happens that bends the monthly chart back down, then sure, things are up for discussion. You know, we've speculated all we can, and that's the wave trend. Let me see. How long is this recording going? As usual, I'm over time. It's already 40 minutes. Let's do a quick around the world on. Let's just do Bitcoin and Ethereum and the ratio. The main thing. So you know, we're gonna have a weekly close in a few hours. Obviously, Bitcoin had absolutely gangbusters second week. Welcome to phase 2 of the bull. You're gonna get moves like this, and then honestly, it's probably gonna flatten out on the weekly scale. Notice I just said that it wouldn't flatten out on the monthly scale. I don't think so, at least. But on the weekly scale, absolutely. Like this is a massive move. If Bitcoin wants to come all the way back down, I think, you know. What I was gonna say before, there is something playing out here on the RSI. So back in April, Bitcoin weekly hit an RSI of 69.65. It's only at 69.96. If something happens in the next few hours to bring Bitcoin down, it has a ways to go, but I don't know. If it crashed down to like 33.7, 33.6 probably, took off a chunk of percentage in just one day, you could see that RSI come below 69.65, and that would create a bear div on the weekly, which would be fairly substantial. I think if you do get a bear div here, that can bring Bitcoin down to like certainly 31.5 becomes a target, if not 30K. We'd have to reevaluate at that point if it can continue going back down to our big target of 28.1. I don't know if we'll see that again, but that is the low that Bitcoin is. Well, okay, that we're speculating Bitcoin is not permitted to break ever again, based on, you know, this wave trend reading that we did back in September. I've talked about that endlessly, so I'm not going to go over it again. So yeah, if the bear div plays out, 31.5, 30K, and maybe even 28.1, you know, become levels to watch. That being said, you know, it takes a lot to move the RSI on the weekly chart. This could be perfectly fine. Maybe it comes down to right around 69.65, and you only get a Class C divergence. If you only get a Class C bear div here, I don't see a ton of bad things happening to Bitcoin. Maybe it comes down to test like 32K, like the high of this candle. 32K is, of course, the key level to hold if it wants to just keep ripping upwards into the 38.5 zone where a lot of the supply starts. So we'll see what happens there. Ethereum honestly looks fine. Wave trend's curving up. Ethereum might have the next say in the in like the bullish rips, because there's a lot of air between, if it holds 1776, which I've said it needs to hold 1776, and by golly, look what number it's been at for how many days? You've got 1766, 1785, 1787. This was a good close. This was up off the line, 1803. Closed down at 1779. Closed at 1776. I don't make up these numbers. They're there for a reason. Right now it's bouncing pretty juicily on the daily. And so if the weekly, it's just barely over it, but Ethereum likes to only just barely do things and then rip. So there's a lot of air between 1776 and then really the only lines are 1850 and then just 1940. 1940 is where a ton of supply lives, so we'll talk about that later. But ETH looks good. Bit of a long wick, a longer wick on Ethereum than Bitcoin, so that's not great. But even going into the least lovely thing on the chart is, of course, the ratio. Because what I was just going to say is, with this longer wick on ETH, if Bitcoin does come down, Ethereum could just straight up have like a red week all the way down, possibly back down into the 1600s or 1500s, because of the ratio not really performing as well. To that point, the ratio has lost key level of 0.54. It's not going to get it back today unless there's a miracle. And so what that represents is, unfortunately, just a straight up true lower low. You've got a lower price, if you want to call it that, 0.052. And the RSI is lower than its last low in June of 2022, where it was 30.14. It's now at 27. That's, again, unless there's some kind of miracle, it's not going to bounce back today. So right now, the ratio is looking at a lower low, which means that further lows will occur and require a bull div to pull out of. So because of the strong bounce off of 0.512, which is the next little bit of support, I could see the ratio bouncing a little bit. Maybe that gets us to the 1940 zone. Bounce here, and then it does need to set a lower low and pick up a bull div on the RSI. I think that's all very possible. I think that's probably how the year ends, because back in 2019, Ethereum, the ratio did the same exact thing. Where it's set, it didn't set quite a lower low, actually, it just double bottomed. But again, it also hadn't had a massive, it's just straight up set a higher low, actually. Closed at 0.176, closed at 0.174. Okay, so yeah, it had a higher low, so it didn't need a divergence there. But anyway, my point is, going to the end of the year, Ethereum will bleed off did bleed off for the last 2 months. I could see that happening again, although this time I would speculate that it picks up a bull div as it does it, only because if it goes straight down from here, first of all, it's hilariously oversold, both the RSI and the wave trend. So that would be pretty strange. You could have a waterfall, just a complete collapse on the ratio, but why? That doesn't seem beneficial to bulls or bears, which usually means it won't happen. However, if it were to continue going straight down, the issue becomes, if it cuts through 0.512, the next major zone, there's there's a couple of volume pivots at 0.48, but really the next zone is 0.44. So I'd rather not be down there for this, because, as the bull market is starting, that wouldn't be a great place to start from. I would much rather prefer for our beloved Ethereum that get a little bounce here, sell off into the end of the year, pick up a bull div, and then just, we can start back up slowly. The start of the bull market is never great for the ratio, but it usually does start to build support at the very least. You can see at the end of 2019, actually it just ramped up in January, February, because obviously February is ETH's favorite month. And I guess April. But February tends to be good for ETH, so at the very least, I would expect some structure to build off of hopefully a bull div. That's what I'm hoping for. But right now, we don't have one. Non-purists will say that, oh, well, currently the candle bottom is at 5233, and the low over here, it hasn't even, it's stuck at these wick lows over here. Oh, that doesn't count as a lower low. Well, I'm here to tell you that I don't mix that shit, okay? It's candles and candles or wicks and wicks. You can't mix candles and wicks. That doesn't... I know people do. And then here's the worst part is confirmation bias. Like, if that does happen, like if it bounces here, first of all you're going to hear is people going, oh my gosh, the candle and the wick mixed and it worked for us. And I'm just going to be sitting here rolling my eyes going, God damn it. Like, I hate confirmation bias. Weird things can happen on charts. We're all about probabilities. It's unlikely to happen. If it does, I'll just be sitting here annoyed. Gosh, anything else to talk about? SPY. SPY, on using the wave trend, for example, it did cross through the midpoint, which, isn't great, but it's crossed through the midpoint before. I don't think it responds to the wave trend. I think the SPY is so mature that it doesn't respond quite as strictly to the wave trend, whereas crypto's, a fresh young child and really, really wants to stick to the wave trend. So SPY can go below it and then quickly reverse back above. So it being below isn't a huge deal. It's also picking up a bull div on the MACD portion of the wave trend. You can see like this blue area here. It's currently putting in a higher low. So that's a bull divergence there. And then also on the daily, there is a bull div here. Barely pulled it off. I was joking about this in Discord. So in early October, we had a SPY low on the RSI. That's over here, 2902. So it had to hold it as it went down. It has to hold that RSI, and it was below all day on Friday until it finally pulled back above and closed at 29.22, which means a higher low RSI. That is a bull divergence, which means a bounce is coming, almost certainly. There's always a chance that there is, a waterfall collapse. That's the other side of things. That's where people are like, oh, wow, so it can go up or down. No, what I'm saying is you'll either start to bounce or you'll get a massive blow off bottom. I'm talking like shitty fucking diapers. I'm not calling for another like tiny red day. That doesn't seem to make sense to me. It could be a sting down into a Dragonfly Doji and still be a red day. I hope we can all agree that would not be what I'm talking about. I mean, just like easing down into a red day. That doesn't seem likely. I think it's either a bounce or a capitulation going on. That's what happens at this level of RSI. It's either shit your diapers bad or you start to see a bounce, especially with that bull div building. So all in all, I mean, this looks like a typical October scare for the SPY. For stocks, it's nothing out of the ordinary. And then the last thing is, of course, our beloved yields, the chart that I personally have been spearheading all year. Let's take a look. We got our massive indicator when I recorded live, a month ago now. And we saw our first ever higher high on the weekly yield curve. And what that typically means is there's usually about a year until the recession. And that's not a panic thing. It just means to start paying attention to your portfolios. And by that, I mean all your portfolios. Again, not financial advice, but this is what I'm going to be doing. I'm just keeping an eye on things. I'm starting to move things around. I'm starting to take into account, that the market will be, likely ending and maybe starting to roll over in about a year. Not panicking, not worried, just taking a look at things. This tends to be a harbinger of the end of happy times. But a harbinger of the end is not the end. There's still a little bit ways to go. In fact, I think that in this next year or so until the recession, we're going to get that crypto blow off top. And I think we'll have a nice little rip of a bull run. It's going to be fast. But, hey, so far I'm right. Bitcoin is making some pretty fast moves ever since I recorded that video. I recorded that video here, and it ripped. So, hooray me. Anything else going on here? We've got, there's actually a bear div on the weekly forming on the yield curve. And so, that suggests, that's probably going to come and relax a bit down. As is expected, it needs to be retesting support. I don't know if it's going to come back down to 05 again. It already did that once, which was very interesting. We talked about that on the the week that I recorded this, I was like, well, it has to retest. I think I said the MAs. Let's turn off the RSI for a second. Sorry, I don't pay for TradingView, so I have to like mess around with different indicators. I said it was gonna come back down and retest some key levels. I didn't think it was gonna break out quite like that, but there it did. It's already back above the 100 week and tested it perfectly. Look at that. And prior to that, it tested the key level of 0.45. Looks like it got down to. Anyway, the numbers here actually don't matter because these are all like crazy exponential percentages. This is really about pretty pictures. Pretty pictures on the chart. I mean, after the first higher high on the weekly, what it tends to do is it has to come back down and retest some of the moving averages and key supports. It did this back in 2007, and it didn't get above the 100 week quite as fast as it did here. It took until June 2007 to do that, but after that it was constantly testing the 10 week moving average. And then I think we looked at that one, in the video that I recorded, we looked at potential signs that the market has topped. We know now, only looking back, that the market did effectively reach a top in July 2007. It would continue up, into a much riskier double top. But if you were out in 2007, I'm sure you were very, very happy. Here's July 2007. You could have stayed in until October 2007, but, that's on you. I will be getting out at whatever the new July 07 point is. And so, that was right around here when it first tested and held the 10 week moving average. We're not there yet. We're not even we're still pretty far away from the 200. So yeah, all looks fine, but timer started. Bit of a doji on this week, but that's a dragonfly. That's an upward doji at the top, which means it doesn't have a ton of strength. Probably means it'll probably climb the it'll probably climb the wick down a little bit. Maybe it tests the 100 week more fully, as the 10 week is rushing up, and that's gonna be our sign. Anyway, okay, I've had enough of this video. Leave your comments. Leave your questions in the comments, and we're on Discord. I'm sure I left out a ton of major stuff, but I'm out of fuel. Peace.